Hey everyone, this is Neha from Eagle Life Forex and welcome back to my YouTube channel. In this video, I'll be sharing my secret scalping strategy that has a win rate of 85% and I've made huge profits with this simple yet powerful scalping strategy. I personally know many traders making six figures with just scalping alone, and you can be a profitable trader as well. Just follow my 3 simple step scalping and day trading strategy that will solve all of your trading problems. First, we'll do scalping, and in the end of this video I'll show how this strategy can be used in day trading with adding some price action, because day trading and scalping are two different things. So watch full video and hit the like button right there. Let's start the video. What's scalping in simple terms? Scalping is the trading strategy that includes taking a large number of small trades. These trades could not be held for a long time, hence a tight entry and exit point is really important. For this strategy, we'll be using only one indicator, that is exponential moving averages. So EMA is simply weighted average of recent price movements. Moving on to the strategy now. This is pound yen 5-minute chart. 5-minute chart is compulsory for this scalping strategy. We have 3 EMAs on the chart. The 2-period EMA is white, 9-period EMA is red, and green is 50-period EMA. I'll show you how can you set EMAs in the end of the video. So there are 3 steps of this strategy, so you gotta listen carefully. Number 1 is identify the trend. Of course, the market doesn't move straight, it makes impulsive moves, and depending on the type of move, we identify the trend. So there are 3 types of trend and we'll look at each in detail. Number 1 is the downtrend, that is when the price is moving to the downside, making lower highs and lower lows. Let's see a downtrend on a real chart. So here, lower lows and lower highs indicate that it is a downtrend. We'll be looking for sells only. Number 2 is the sideways. In sideways, price ranges between 2 levels and there's no confirmation of trend. It may start moving up or down anytime. So let's look at sideways in real chart. As you can see, price is just ranging here, so just avoid taking entries in this type of messy setups. It's just a no trade area. Moving on to the third type, we have uptrend, that is when the price is moving to the upside, making consistent higher highs and higher lows. Let's see an uptrend on a real chart. So here, higher highs and higher lows indicate a strong uptrend, so we'll be looking for buys only. Step 2 of this strategy is to confirm that the price is trending below or above 50 EMA. This is a great way to identify how strong the trend is. In case of a downtrend, current price should be below the 50 EMA. In case of an uptrend, 50 EMA should be below the current price. Now for suppose if price is moving in an uptrend but it is below 50 EMA, this is a sign of weak trend and you should avoid taking entries until the price closes above the 50 EMA. The third and last step is to look for crossover of 2 and 9 EMA, 2 and 9 period EMA, and take entry on basis of the trend. So let's test the strategy on real charts. Now first, we identify the trend. So for this, a good practice is to analyze what has happened in the market previously and then visualize what is likely to happen next to it. So what we see is that the market is ranging and it broke to the downside to retest in this previous level and made a reversal, creating high highs and higher lows. So we can visualize that price is likely to continue in an uptrend and we'll be looking for buys only. Moving on to the next step, that is to make sure that uptrend is above the 50 EMA. But here the trend is still below the 50 EMA, so let's wait and see if the price goes above it. So here price just broke 50 EMA, confirming a strong uptrend, and now we want a crossover of 2 and 9 EMA to take buys. So let's move. Here a crossover just happened and 2 EMA is above 9 EMA, so we'll take buys right above the crossover and keep our stop loss below 9 EMA using 1 to 2 risk to reward ratio. Now let's see if it worked or not, and that's it. Perfect setup with 3 simple steps. Just secure your positions once the target is hit, and don't be greedy and wait for another opportunity. So let's do another example. Like here, it is still an uptrend because the 50 EMA is below the current price. Let's wait for a crossover. Be careful in this type of situation because in the cross, the 2 EMA just cross below the 9 EMA, indicating that the trend is likely to reverse. So we'll stay away from this and wait for another opportunity, because it's better to wait rather than getting into a wrong trade. So the next crossover looks in our favor because 2 period EMA is above 9 period EMA, so we'll take our buys above the crossovers and see if it worked or not. So yes, it worked really well. You just have to stick with this strategy and be patient enough so that price prints what we visualize. Alright, let's find another opportunity with this strategy. So yes, in the same trend, here's a crossover and 2 EMA is above 9 EMA as we want. Perfect. So we enter buys with 1:2 ratio. So it is clear that this scalping strategy is strong enough and works very well. So let's quickly test this wonderful strategy with a different currency pair and see if it works or not for more clarification and practice. So we'll go with a Euro USD 5-minute chart. Starting with the first step, let's analyze previous price action. The market is ranging, but here then it started making lower highs and lower lows, confirming the downtrend. Now the 50 EMA should be above the current price, and yes, here it is. So we'll wait for the crossover, and 2 EMA should be below the 9 EMA. Let's see if we can get any entry here or not. Let me tell you why the cross is important. For suppose you took sales and price didn't move like this, and just price rejects these previous levels and bounce back up, you lose your money. But if you wait for the crossover, there's a high probability that it'll be a winning trade. So moving on, we take sales right below the crossover here and get out of the trade once our target is hit. Let's see if we can find more entries over the trend. Look at the ranging market. This is so messy, we call it sideways, and just stay away from this type of setups and save your money, because there's no clear indication where the price is gonna move. It can go to upside or it can go to the downside. This is just a no trade area. Let's quickly do a last example of scalping here. Higher highs and higher lows. 50 EMA is also above the price, so we'll look for crossover and take buys. Risk to reward is 1:2 and we are done. This strategy works amazing with more than 85% of win trade. We have not lost a single trade so far. Now let's see how can we use this scalping strategy in day trading as well. For this, I'm using Euro USD 30-minute time frame. You can also use 1 hour or 4 hour time frame depending upon your trading style. So the only change that we make in the strategy is that after the crossover, we wait for a candle to close in our direction and the next candle to retrace back towards the crossover or in the opposite direction. In case of an uptrend, we have to wait for a bullish candle to be formed, and in case of a downtrend, we'll wait for a bearish candle after the crossover, and then we'll take entry. I'll show you why the change is important in day trading. Let's see here. Suppose you're looking for crossover to take sales because this is a downtrend. Lower highs and lower lows are being formed and 50 period EMA is above the trend. So everything is perfect. So after a while, a crossover appears and you take sales here without waiting for a candle to close bearish and next candle to retrace back. What happened now is that you can see this candle went down for a while but then just closed bullish. This is the first drawback of not following the strategy, and then next candle retrace back and hit your stop loss, turning your winning trade into the losing one. So what I suggest to avoid such conditions is that always wait for the candle to close and the next candle to retrace and then goes in your direction, and then execute your trade accordingly. You could have took sell sells here, and this would be the perfect trade with zero drawback and huge profits. Let's do an example now. Let me see. Just like here, we wait for a candle to close and execute our trade at the retracement of next candle. If we didn't wait, the stop loss might be hit in the retracement of this candle. In this way, you'll not lose a single trade if you stick to this strategy. So in day trading, you have to be patient. Otherwise, you can just stick to scalping for building confidence and patience. So this brings us to the end of this video. If you have any confusion, just rewatch the video, or you can ask me in the comments down below. Now I'll quickly show you how to set exponential moving average in TradingView. So for this, let's remove the 2 EMA and then we'll add it again. Tap the indicator button here, search for EMA. This is 9 period EMA by default, so we'll change the period length in the settings right here. Right in inputs, write 2 in the length column, and we'll set the color to white. You can choose any color of your choice and press OK. So now we have 2, 9 and 50 period EMA on our charts. So this was it for today. I hope that you guys understood this strategy. It takes a lot of time and efforts to make a video because I'm a fund manager and a mentor at the same time. So please like this video, subscribe to my YouTube channel and follow me on Instagram so that we can reach out more people. Thanks for watching.